Ankita, hi, good to have you with us. How have you been?
Hi, Ashu. Lovely to be here. I've been good, and it's Friday, so very happy.
Interesting. Ankita, pleasure to have you with us. We've been looking forward to this discussion. I think these are interesting times, right? With what's happening in the macroeconomic front globally, it definitely has a rub off on the Indian market, right? And it just becomes important to understand, some of the priorities, for example, which are top of the agenda and top of the list for venture investors, right? This becomes an interesting session at that level. And I think more importantly, what we'll try and also cover in the course of the session is a lot of guidance, right, that you can possibly put out for a lot of founders. The good thing is that, and of course, I'd love to hear your comments on that one, right, is that there is this renewed sensibility which is there towards revenue, efficiency.
Of
Which is
course.
just so much more important in a market like India, right? Which tends to readjust itself very, very quickly, right? We'll cover that also in the part of this conversation. But before we do that, Ankit, I'd love a quick round of introduction, and we dive into, talking about StrongHer from there on.
Yeah, sure. Thanks, Ashu, again for having me here. I'll just give a quick introduction about myself, and then would love to touch upon all the topics
Sure.
you mentioned, right? I think they're very relevant to what's happening today. So I'm someone who's worked and lived across US, UK, India, Singapore. I'm an engineer who then kind of went into the world of finance. I've lived the entire journey of being, a finance professional. Starting
Sure.
my career in London, I used to work for a private equity fund that used to manage $2 billion funds under management, looking at investments in the emerging markets. I did that for a few years. Loved the scale and momentum companies can achieve with capital. And then
Right.
the engineer in me came out, and I said, let me go back to working with early stage, tech companies,
Right.
looking at the emerging markets, and that's where all the innovation is, right? I think it's
Right.
really exciting to work with young minds, innovative companies, emerging tech. So I moved
Right.
over to venture. That's when my venture journey started around 2012. And that's when I kind of moved from London back to Singapore/India. And I wanted to discover venture, right? So I joined a few angel networks. Now there are so many. Back then, there were very few, by the way.
Right.
So a very good network of entrepreneurs, CXOs, investors really helped me learn what was happening in the ecosystem, what kind of companies were being built, what were people investing in. Basically set up my own micro fund to make angel investments. And I also got other individuals, but also other pre-seed funds to co-invest along with us.
Sure.
I also set up a venture lab, co-founded a venture lab called Wavemaker Labs in Singapore, which did very well. And it was one of the first incubators at that time in Singapore to get incubated by the Singapore Technology Incubation Scheme as part of the government.
Right.
So I did that. And then, so at that time, I made a bunch of investments, and some notable investments, which we've seen over the years today, is I was one of the first investors in Licious, which is the D2C meat brand, which became a unicorn last year. I invested in Unifor, which is in the conversational AI space again. They're now 2.5 billion. And from the venture lab, a bunch of amazing investments. But one of the most kind of, I think, notable and memorable investment for me was a company called Luxola, which became Asia's biggest online cosmetic store, and we kind of sold it to Sephora. And it was run by a woman founder, Alexis, who went on to head Southeast Asia Sephora. But that's when it kind of all came to me, and I said, being in
Right.
this whole investment space as a professional, now as an angel investor, and now also as a venture lab fund investor, why don't I see more women entrepreneurs, right? Where are the women entrepreneurs? And why aren't there more women on the investing side, making these decisions? So there's a huge gap, right? No access to capital and no capital decisions being made by women. So we needed to change this. So around 2014-15, I launched a Saha fund, which was at that time the very first early stage venture fund to invest in women entrepreneurs. And I said, I'm going to just do just that. I'm going to address this gap. I want to create a fund and a platform that allows women entrepreneurs to have access to capital, networks, connections, etc., and basically be able to build businesses out. So I set up
Sure.
this fund, saying that we want to empower and engage more women as entrepreneurs to invest in women-led, women-focused companies. Went on to raise, a $10 million fund in India and US. had the support of amazing people like Mrs. Kiran Mazumdar Shaw, Zia Modi, a lot of family offices, SIDBI. So a lot of interest in, because I think it was the first of its kind, a lot of access to deal flow, founder excitement. So that did very well. We've made a bunch of investments. We've had a few exits now, some up rounds happening. Notable investments is Fraternity, which got sold to CureFit. We're still investors in Love Local, etc. As of last year, I said, let's go global, let's go bigger. So I launched, I kind of launched Fund 2 as StrongHer Ventures. And so now this is $100 million fund to again invest in women-led, women-focused companies in India and US and select global geographies. But we're looking at sectors like fintech, future of work, healthcare, consumer and Web 3.0, because our thesis is to invest, of course, in women-led and focused companies, but also sectors we believe are bringing women back into the workforce and allowing them to be independent, successful consumers and creators. So yeah, that's what I do, fully entrenched into the VC ecosystem with women entrepreneurship.
Amazing. I know, Ankita, I've been in this ecosystem for some time now. I've had the opportunity of talking to many investors, right? Knowing them at a personal level, right? I think my understanding is that predominantly when you're making an investment, right, as a venture firm, right, you're largely looking at the macros, right? You're not necessarily. I mean, founders are important in the process, but you essentially sort of banking on the larger possibility that exists, right? Those numbers become very important in the larger scheme of things, right? Of course, that camaraderie, that combination of the team and all of that becomes important, right? And I understand where you're coming from, right? That there's a less representation of women entrepreneurs and and women find the founders and investors as well. But how does this change, right? What, for example, are some of those nuances that you will look at when you're making investments in women-led entrepreneurs? What changes in this equation? I'd love to understand that.
Like you very rightly said, I think keeping the gender topic aside, when we're looking to invest into companies as pure financial investors, right, and as VCs who have to see those triple-digit growths and multiples. In the end, you're looking at the macros, you're looking at the market, you're looking, at all those factors that can make this business successful and scalable, right? Of course, I'm an early stage investor, so the founder, their background, everything counts. Along with, of course, I think the key differentiator is the idea that they have come with and how they can scale this up, right? And of course, what's happening in the market is a huge support and win to that idea, right? So I think, like any other investor out there, we look at the founder, the unit economics, the GTM, the strategy, the unique differentiator. But because we want to make this kind of difference and we want to create this impact, the same way when you want to talk about something, when you want to bring about prominence and when you want to amplify an idea, you bring a focus to it. I have decided to bring a focus to women-led and focused companies because of the lack thereof of it, but also the fact that I truly believe that if there is inclusive leadership from the very beginning in a company, that will truly create a very inclusive, scalable business as well, right? And so that is the basic thesis that, how can you just keep on creating companies and businesses not having women at leadership levels and not keeping half the population in mind, right? So that's the kind of thesis that we look at.
Interesting. No, I resonate with that, right? I believe women in power, women in charge. I think the world is going to be a better place in many ways, right? I think we're going to be slightly more responsible as a society, which I think for a variety of reasons and the baggage that we've carried, right? I think we've lost that softness, right? I think, and I think that is definitely going to shift, right? So kudos to you on the kind of effort that you bring in. Now, Ankita, I'd love to talk to you about the accelerator, right? So within StrongHer, you have an Arise accelerator as well. Tell me a little more about that, right? What are you kind of focusing on there? Is this an entry point for you from a fund standpoint, or is this something which operates independently, where you engage with many more founders, right? And the qualified ones or the ones who are kind of doing well, sort of graduate to the next level, where you kind of come in and give them capital support as well, right? I'd love to understand that.
Yeah, sure. Actually, the accelerator is actually very exciting for us. It's actually something that we spent some time thinking about, and it came about because of the fact that, of course, that we realized that we were funding female founders, but we realized that we were building this amazing community around us, given that we were the only ones doing it, and there was a much need in the market to really get the whole ecosystem involved, right? Where you have not just female founders and female focused companies, but you're getting more women and diversity focused individuals involved as mentors, advisors, investors, partners, and board members, right? And also, to be honest, I think most funds, I mean, you have to go beyond capital, right? We were doing so much more beyond capital in terms of mentorship, helping, you grow your business, get your next round of funding, meet the right partners to scale up, getting your first client and customers. We said, hey, let's do that and create that program, right? That allows us to really go, kind of one level, deeper into, pre-seed onwards. So we're getting access to founders much earlier, right? Before seed, because, and the ecosystem is also matured and evolved. So now pre-seed is the new seed, right? So it allows us to play in that kind of space, create a community, because I think that's something, the power of community is something that I think personally discovered because of COVID, where suddenly I realized that I could connect with anyone online. I could be in these online forums online, and very women-specific ones. And it was very powerful. And I realized that, of course, I've always been trying to solve for the space of capital, but I think it's so important that women especially have access to professional networks and communities and peer connects for themselves, for their businesses, right? So the accelerator is a great combination of capital, connects, community, and continuous learning that we're able to bring. And the response has been amazing, right? So it's the first capital-backed largest accelerator for female founders as well. So we're very happy to kind of lead the way there as well.
Super. Ankita, would love to understand, what are the check sizes that you're looking at, right? At a fund level and accelerator level, what's the participation that you, of course, apart from all the other things that you're kind of bringing, right? And this is, super community of achievers that you're kind of building, right? And putting together. And I think that's just so much more important, right? The founders don't have to kind of struggle and, go through that learning curve themselves, right? I mean, this is quick advice which is available, at hand, right? But what are the check sizes on the front? Understand that?
Yeah, sure. Because we come in anytime from pre-seed to early stage Series A, we can invest anywhere as little as $50K USD to $2 million, right? Depending on where we come in. So we typically, most of our checks are pre-seed and seed. So in those ranges, it can be anywhere from 50 to 250K USD. And of course, like you said, the capital and community is very important, but I think our differentiator is our amazing mentor network. And our access to our B2B Enterprise Connect network, which really, so we're really taking away everything that is your pain point to really kind of just take your capital, take your idea, take everything that you have and accelerate you.
Super. Ankita, I'd love to understand now. I'm going to move to a slightly more macro the macro environment, right? And I think that's just so much more important in the current times, right? Now, what we're seeing is almost borderline chaos, right? Not necessarily very clear. Unlike other crises that we've seen as at an economic level, right? I think there's been a certain predictability, there's been a certain balance, right? But I think that what we're kind of seeing, right? The problem is not essentially coming from one side, right? The manifestation is across multiple other foundational pieces, right? And then all of that is kind of bundling up and then starting in tight economies, right? We've seen depleting rate of savings. COVID has in any way not been very, very kind, right? This war kind of brings a very different kind of inflationary pressure, right, of sorts. So we are, and like I said, right, I mean, this is not just a phenomenon which is country specific, right? This is something which is across all countries, right? VCs are tightening their, purses, right? The check sizes, for example, have, while of course it's not out in the media, right? But the check sizes, for example, one, they've slowed. Second, they're not taking as much risk, right? So while the commitment could be higher, right? The outflow is more systematic, right? If I could put it that way. So many of these things are actually happening, right? The good part is, at least in India, we're not seeing a slow or a slowdown in the early stage ecosystem, right? The momentum continues to be there. I mean, there are possibly ups and downs, right? The numbers are a little off the from where we were in the last 2 years, but I think the momentum still continues, right? Which of course is a little bit of a resurrection of confidence that continues to be there, as the possibility for consumption continues. But what's your sense of the overall macroeconomic condition of sorts, right? I mean, you have to look at players upstream, right? They are taking time, right? To sort of come in and do follow-on rounds, right? What's your sense of it? What do you make out of the current scenario that we see?
Yeah, very rightly said. I think the environment globally has affected the kind of amount and quantum of kind of cash being dispersed or being invested. There is, of course, a lot of dry powder, by the way. in the market. But I think it's a more sensible market, like you were mentioning, and I think it's a more people don't want to take risks, they don't want to experiment. Like, for example, I very jokingly said that, of course, I mean, before all this kind of came out, 12 to 18 months ago, I think anyone with a pitch deck was getting funded, right? It was like, that was the euphoria, right? Especially in India, and the whole D2C space, or even EdTech had a huge rise. Anything with that was just getting funded. You just take a pitch deck and you're funded. So I think that has definitely just, kind of completely quietened down. The truth is, investors have money, there is dry powder, but they are reserving that cash for their current portfolio to support their current portfolio, right? Because I think it's uncertain times, right? So you need to plan for longer runways. You need to kind of conserve cash in that sense. People will look to invest in something which is core and complementary and not, experimental. I think there's definitely no experiments happening there. Of course, there is much more investment activity, whether it be India or US, in early stage investing always. So I think there's a lot of cash there, and I think it's a great time. It's an investor's market now. So I think if there's some great founders out there, and I think because of the whole, the cycles maturing, you don't have first time founders now. You have these serial entrepreneurs who are going out and raising money, or you have these people from these amazing unicorn teams coming out and coming out as entrepreneurs, right? So the quality of founders is amazing. So if you have the money, you're going to invest. But of course, I think we saw this euphoria, and therefore we saw a lot of funding without diligence, or crazy valuations, and no revenues, and I think no focus on unit economics. But I think the real way to invest is keeping all that in mind, right? I think investing should always be sustainable and scalable, right? So I think now investors are asking, are you monetizing? When will break even happen?
Right.
What are the unit economics, etc.? And unless of course your business requires you to be community first or growth first in that sense, but otherwise you need to have those in check, right? So I think those days are, of course, right now people are not going to give you a look without having something there in hand, right? Yeah, so I think that's very important. Of course, later stage has definitely been affected quite a lot, because so many companies, IPOs got delayed. There is less money in later stage because of the fact that exits have reduced in terms of new rounds of funding, later stage funds, and in terms of not being able to go public. So I think that's the kind of sentiment and what we're kind of seeing right now.
Interesting. Ankita, I want to understand one thing. Now, typically, what we've seen, the euphoria that we've seen in the last 2 years, right, which was incredible. I think, it was feeding off the confidence that people had. And we kind of offered, the kind of demographics that no other country possibly can match, right? And we're a very tightly packed market, right? The good part is a certain sense of homogeneity which is coming in, right? Now, but in a market like this, right? So, I want to understand how you are, for example, kind of looking at it in your thesis, right? Dissecting, and this is a fairly complex problem to sort of solve, right? Now, what is happening is, on one side, because of the content that is getting, for example, created, right? There's a certain homogeneity which is coming in the consumer base, right? Now, at the same time, when in an environment like today, right? For example, where there's liquidity tightening, right? You're essentially expecting that business to become or be very or prioritize revenue, right? Vis-a-vis, say, engagement for that matter, right? Or even if it's engagement led, you want to see monetization possibilities of monetization much early on, right? Now, the fact of the matter is, because the content is getting created, right, and there is no, for example, limitation, right, or no filter or no seed to sort of kind of check that, control that. It's free flowing, literally, right? The connectivity continues to empower more and more consumption, right? Now, the fact of the matter is, by the time a startup gets to a point, because they're prioritizing cash flows, and they get to a point where they start to cater to a certain market, the preferences of that market could shift, right? Which essentially means that the founder could just come back to square one, while he becomes relevant for you or say anybody else, right? From an investor standpoint, because the consumer preference is continuously shifting, right? What happens in an environment like that, right? Especially consumer-led business, do you see something that you alluded to? What happens to an environment like that? And of course, on the other side, you have other major players, right? For example, the Mensas and the Global in the world, right? Which have made a capital-focused model, right? And nothing wrong with that. They're kind of prioritizing that, right? And that's a very, very complex condition, right? Are we talking about a very different kind of a winter, right? And that's largely being led by the consumer because of this changing dynamic preference order, which we kind of see. What's your sense of it?
Yeah, I think just talking from because I think this is very focused on a D2C brands and consumers, and just talking about that. I think you're very right. Because right now working with founders, they have the product ready. Now they want to scale, and a lot of that effort is in they want to get into marketing and really get consumers to know about their product and get more aware and educated. But everyone's having to cut back on marketing spends, right? So I think it's a time that also it makes you rethink. Because a lot of times the marketing spends or what you go out and do also you need to kind of recalibrate and see what is the impact being created, right?
Sure.
And I think the great thing today is that of course there's content, but there's so many different medias to talk about your brand now. In the olden days you had to buy these big billboards or have to get this news channel, this thing, but now you have Instagram, Facebook, social media. You make your customers your brand ambassadors, right? Sure. So I think you find very innovative ways to kind of create brand loyalty, right? And influence and ambassadors, etc., for what you're trying to create as a consumer D2C brand, right?
Sure.
And I mean, D2C itself has taken away the entire retail infrastructure, right? So on the whole, you're kind of working on a very lean model itself, right? So I think it allows you to think about how you're using your marketing spend, how to be more innovative and come out with strategies that are not just short-term lived, but create a long-term impact in brand recognition and usage of the customer. And how do you, of course, you get someone to buy once and buy twice, but how do you make sure they stay on? And so, there's, in Amazon, you can kind of activate subscription, but so many brands are getting into subscription or more regular orders, daily orders, monthly orders, etc. So I think it allows you to kind of utilize many more strategies in talking about your brand and product. But I think it makes you think long-term on how to create brand loyalty and customer consumption on an ongoing basis. So how do you create customer loyalty and make it sustainable?
But Ankita, don't you think that's a misnomer, right? I mean, in an environment where, like I said, right? I mean, if we talk about pre-COVID sort of an era, right? We used to talk of, how content was, for example, becoming so much more pertinent, right? And while you say what you say, right, there are multiple channels. Eventually, the channel of distribution is just about 3 and 4, right? So for you to discover your competition and and for a consumer to identify many other brands, it's just so much more transparent today, right? We are essentially connected markets, right? I think that just adds to a very different kind of complexity, right? So when you're saying long term, right, from a consumer's mindset, he or she is, the flavor is changing pretty much every single moment they interact with new content, right? How does the founder think long term, right? That calls for a very different kind of agility to cater and service that, right? And a lot of dry powder that you're talking about possibly will just be on the at bay, right? I mean, will not even get a chance to participate, right? Because they got iffy, right, when they possibly should have stepped up on the gas, right? While the complexities exist. I mean, I don't know.
I agree.
That's a complex. That's complex.
No, exactly. There is no right or wrong answer to it, and I think it's about the fact that you just need to have, as a founder, access to the runway, but access to basically knowing that you have to now use your money wisely. I think my main point to drive was, of course, consumer taste keeps changing, but I have recently invested in 2 very conscious consumer marketplaces and platforms. Sure. So we are really building on the fact that we're looking at brands that are long lasting and memorable. Because I think it's a very small percentage right now. I won't speak for the masses. But, we're trying to move away from this whole fast fashion, disposable income and all those things, right? To really buying into ethos and philosophy of brands right. and loyalty and all that stuff, right? So I think at every level, people are just being made to think that how do you make some kind of impact which creates brand recall and the usage of your product, not seasonal or, just every like disposable, but really belongs in the consumer's mind and wallet because it means something to them, right? And of course, I completely agree. There are going to be a lot of brands out there who could have really gained momentum, but now their wallets are very tight. So they can't go out and do all those ad spends, and you have to also club it with these great social media, even though they're great enablers. Those guys are so smart. Every day they change their algorithms as well. So something which works for you last month, it won't work next month as well, right? So I think every day, whether you have money or not, you're being tested, on how to keep selling in the most effective way to your consumer.
No, I think it's a crazy piece, right? And I like the contrarian approach that you're sort of now kind of bringing in, right? Where you're trying to ditch the trends, right, in the madness in the market, right? But I think such opportunities are far and few, unfortunately, right? I think being young as an economy, I think has its own pangs, right? And I think there's little choice that founders have, right? And they'll have to essentially deal with it. Again, I'd love to understand more about the portfolio, right? And your thesis going forward. What are some of the companies that you're looking at? Right? What are some of the areas that have become very exciting, right? Especially what we're kind of seeing now, because 2020 was one, I think, step one, right? How kind of, for example, the economy transformed, right? I think what we're seeing in 2022 is step two of that, right? Where we're seeing all of these challenges, right? Optimization going to happen and so on and so forth, right? But I think my sense is, and correct me if I'm wrong, right? We can always agree to disagree. My sense is, I think going forward, India and the world is going to be a combination of these two, right? A connected economy which is transparent, where there's a lot of information first in many ways, and simultaneously smart, right? And knowing what they want, prioritizing what they want, not necessarily succumbing to or being affiliated with one source, right, or a brand, but many more of them, right? What's your sense of it? What are the trends that you see emerging, and the possible investment areas that you think are going to be very exciting going forward?
Yeah, sure. I mean, I think for us, a key trend or enabler for any company we look at is technology, right? And I think that just keeps accelerating. I invest both in India and US. So I think India is a very, very powerful consumer story. So I think anything in the consumer space is great. We've always heard of, B2B companies not being able to sell in India, but that is also changing. So a lot of technology is made in India for the world. And of course, you see so many companies moving into the US and Europe, but I think there's a huge space now where Indian companies can also sell to India itself, right? So that's a huge trend as well. I'm loving the emergence of so many deep tech and AI companies in India, right? So we've invested in two companies which are kind of in healthcare and AI and deep tech, etc. So I think that's a very popular space. We're also, I think we're invested in marketplaces and brands, and I prefer marketplaces more than brands in that sense. Right. I think there's much more that they can do, and I think there's a huge advantage over kind of launching your own brands within the marketplace, your own kind of house brands, and then kind of creating this kind of platform of brands. But I think there's going to be a lot of consolidation in that space, so I think that's very interesting. We saw, of course, because of COVID, so much happening in the skilling, edtech space. But I think there's this whole creator economy that is being formed and continues to be formed. And I think India, is going to play a big role in that as well, right? This whole gig and creator economy. And it's all these trends are great, for the economy, but also for what we're doing at StrongHer in terms of just getting more women involved. I mean, it's amazing if anyone can work from anywhere, right? And there's this whole fascination of, and I think just India just poised amazingly where they are today, right? The number 3 in the startup world, and we saw more than 100 unicorns now. And I think because I spend time between US and India, and everyone's wanting to invest in India now, right? Even some guy living in Texas who's never been to India wants to invest in India. Right? so everyone wants to buy into this great unicorn story. So this is a huge plus for India. Right. I think if we just keep riding the wave, and of course all this unfortunately the economy is just going through some bad phase right now. Right. But I think India will just keep growing and emerging as kind of a world-class place to innovate. And I've seen the whole thing of where of course we have this great country of engineers building and being these being the outsourcing destination for all these countries who are building from the back, to then us kind of saying that, hey, let's bring what's in the West to India, to then being made in India for India. But I think now we're into made in India for the world, right? So we've seen that whole cycle, and I think we're going to see a lot of people then making anywhere else in the world for India.
Super, that's amazing, and I think more women in charge, right?
Yes.
Right. I think
more equal representation. Yeah.
Absolutely. I think that's very important. Like I said, I fundamentally believe I think world is going to be a safer place with more women in charge, right? More sensible place, right? If you can put it that way.
Successful, sensible, everything good.
Everything good, right? And I think we need that, right? We need that EQ, right? I think as a regular play. In a way, you answered this, right? What are the next 2.5 years like? Right? What are immediate pieces that you're solving for? Of course, I'm sure your investment pipeline is already kind of strong and growing, right? But what are the aspirations? I mean, where do we see you next couple of years? how many investments could you have made? You've given us a flavor in terms of sectors that you're kind of
Yes.
looking at, and I think honestly, the temptation is just too high when you're in a market like India, right? I think everything seems so possible in many ways, right? But what are some of the investments that we see you do, or bets that you take, and what's the aspiration of the Rise Accelerator that you have, right? The need for that is beyond tier A markets, right?
Yeah. No, of course. I think, we are just thinking big and scale. And my aspiration is, now with the launch of the accelerator, that, each cohort itself will invest in, say 20 companies. We'll have 2 cohorts a year, so almost 40, 50 companies a year. So in the next 5 years, we'll probably would have invested in more than 250 pre-seed companies, right? Along with a bunch of more first check-ins at seed level. So a lot of companies being funded, but a lot more being accelerated. So, the idea is that, after 5 years, first of all, we're hopefully, the idea is to be $1 billion plus AUM fund, with more than, 500 companies being invested in from the accelerator and the fund itself, and more than 1 million women being impacted, right? So I think we're all for profit, all for financial, profits, etc., but also a lot of impact being created in the ecosystem in terms of entrepreneurship, job creation, and standard of living, etc. All those things. So that's what we want to be. So we want to be the one-stop platform for all things women entrepreneurship.
Super. Ankita, we wish you all the very best. Thank you so much for doing that. It was a pleasure to have you with us. I mean, all the good things have to come to an end, so does this. But I think I'd love to have you again with us, of say season 2, right? Of doing this, right? Because I think all of what is happening right now, right? And with women as a focus, right? I think no conversation can be complete, right? India is a massively diverse market. Of course, you're investing in other markets as well. But given that you're here, you're operating from here, the impact, the impact that you want to create, I think is extremely heartening, right? At many levels. Would love to have you with us much sooner and talk about some of these bits and pieces that are coming together and how beautifully you're building it. Thank you so much for doing this.
Thank you so much, and and I'd love to come again, share our journey, and just show you all the impact we've created. But thank you so much for having us, and and thank you for what you're doing. I think it's important to be able to share the message and amplify, etc. So thank you.